It's ugly. I don't even know what to say. I don't know what else to say. Have you seen what's happening with mortgage rates? If you haven't, you better check it out. And we're going to talk more about that today. On this cloudy, sad, rainy day here in Phoenix, we have just all the bad news to talk about. So let's get into it. I'm Caitlin McKegg. I'm a real estate broker here in Phoenix, Arizona. Thanks for joining me on my Monday market update. Mortgage rates surpasses 7% in new 2023 high as demand falls again. Ouch. Rates went in a bad direction at the end of last week. So again, if you are under contract, wondering when you should lock in your rate, or about to be under contract, talk to your lender. They'll be able to tell you with a bit more guidance than I can, since they're in this industry every single day and know exactly what affects mortgage rates. They can hopefully guide you better than I can, but check in with them. Mortgage rates could hit 8%, economists say, citing a worrying sign not seen since the Great Recession. That's a great headline, right? Love to hear that. So what they're talking about in this article is historically, the mortgage rate spread has only been around this level only during periods of financial crisis, such as the Great Recession or the early 1980s recession. The historical average is closer to 175 basis points. So this article is going in a little bit more detail of what affects mortgage interest rates, and typically we're looking at the bond market. Again, this is not my area of expertise, but the 10-year Treasury yield is often what the mortgage rates follow. And so as that increases, you tend to see mortgage interest rates increase as well. Of course, all of that is affected just in general by markets, what the Fed does with the federal funds rate, what inflation is doing, what the job market is doing. And that's why we are in this wonderful situation that we're in today. Just looking forward, this week we are going to hear from the Fed on Friday, but they are not meeting this month to determine whether or not they are increasing the federal funds rate. We won't see that until September, but we are going to get some commentary from them on Friday as they meet in Jackson Hole. So that's something to watch out for and could potentially move markets, because oftentimes just their commentary is what can change the direction of mortgage rates. Morgan Stanley, recent relief in housing affordability has been unwound. Another great headline. I told you guys, it's ugly. We've just got ugliness all over here today. So this is talking about housing affordability. It had eased some, but now that these rates have gone up, data gathered by the firm shows that the median monthly payment for a home is up more than $240 over the past 12 months. That's a 13% increase. I think this was written on Saturday. Hopefully they're taking into consideration what happened at the end of last week. But what's interesting is it does say it marks the slowest pace of affordability deterioration since December 2021 and is more in line with previous periods. So that's supposed to be some good news, it sounds like. Any relief that lower mortgage rates were providing to affordability has largely been unwound. In our view, the continued pressure on affordability prevents a significant increase in existing home sales volumes while keeping inventory tight, thus providing room for continued year-over-year growth in new home sales. I talked about new construction on our video, I think it was on Friday, about how the new construction market is kind of booming in a sense because there's not a lot of resale inventory available. And also builders have the budget to buy down rates a little bit more than your typical seller. So you can maybe see a bit more affordability in the new home market, but we'll see if that continues. So we have tight inventory because everyone who has a house right now and doesn't have to move is like, I am not touching a 7 or 8% interest rate with a 10-foot pole. So I'm going to stay here and be comfortable. Why would I list my house even if I want something a little bit bigger or different or whatever? I don't need it. So I'm going to stay in my house. So we've got that situation going on. Then we also have prices that went up this year and mortgage rates that are high and it's not affordable for buyers. So we're just kind of in this like stuck mess, which brings me to my next article. Redfin CEO says housing sales volume has hit rock bottom. Well, they do say in here the only good thing about rock bottom means that the only place you can go next is up. So I am just going to use that little silver lining in this video. But they talk about how prices had dipped for a few months in 2022. Market absorbed the impact, but early 2023, this constrained supply of homes pushed the prices up again. Normally in a correction, there's an actual correction. Home prices come down, and that lets more people into the market. There's a whole generation of millennials who are waiting for their opportunity, and there just hasn't been a break in the market where prices have really come down. So as I was saying, we're in this situation where we don't have the inventory and everything is quite unaffordable for a lot of people. And now housing volume has hit rock bottom, the number of sales that are taking place. And that's not just in Phoenix, that's across the nation. I think we're down by like 2 million or something ridiculous last time I checked when you look on a national scale. Sales per year here in Phoenix, let's pull this up. This is quite ugly. I've shared this as well recently, but let's take a look at it again. Here's where we're at, the pink line. Okay, so we're clearly very low. We take this all the way back to 2019. We're extremely low in terms of number of transactions that we typically see this time of year. And let's just go back to the last few years, and then let's add in some previous years. 2014, kind of close to our volume. 2013 was higher. 2012 was higher. 2011 was higher. 2010. Let's do what you're all thinking. Let's go back to 2008. We're not as low as 2008. So again, another silver lining, you guys. Just good stuff. But transactions are just super low. Nothing's moving. And you know what? There's still some people that want to buy homes. And without people selling their homes, the inventory stays low and could thereby push up prices if we have enough demand. But demand is not our strong suit right now either. So let's move on. Home prices will rise in 2023 as affordability crisis worsens, Goldman says. It's a little confusing. Goldman Sachs projects home prices to climb by 1.8% this year amid housing shortage. I don't know what to say. All I can do is pull up this article. Do we remember this? In March, these 4 cities could see double-digit home price drops. This is when Phoenix was called out to have a 16% decrease in home prices at the beginning of the year. But now, and that was Goldman Sachs, but now Goldman is saying that prices are going to climb by 1.8%. Now, granted, they're not talking specifically about Phoenix in this article, but how the tables have turned, right? It's a very different outlook. So all this to say, predictions are just predictions. It's really hard for anyone to know what's actually going to happen, even if you are a huge company, even if you have access to a ton of data, even if you follow trends every single day. There are curveballs and things that come into the market and the world that can change the trajectory of things. So don't put too much weight in predictions or various, articles that you see out there, even if they're from trusted sources. So moving on, let's talk about Phoenix. Okay. So the Crawford Market Index, as we go through every Monday, I'm a subscriber to the Crawford Report. This index helps us see supply and demand in the market. Any number over 110 is considered a seller's market. So with all of this bad news I've been telling you about, we are still technically in a very weak seller's market in all of Greater Phoenix. Why is that? Because our supply of homes is below normal, with 100 being normal, 52% below normal, and our demand is also below normal, but not as low as supply. So we're 23% below normal for demand, but 52% below normal for supply, which puts us in a seller's market technically. Now, of course, this depends on price range, location, as we talk about every week. Chandler, leading the pack. They've been leading the pack for a while. Look at that market index, 308. when 159 is the overall throughout all of Phoenix. Chandler is much higher, but they have seen a 7% change month over month negative. So the red arrows mean bad for sellers. The green arrow means good for sellers. There's a lot of red arrows there. So even though we're in this weak sellers market, we've been seeing some deterioration in the leverage that sellers have. Gilbert came back month over month by 1%. They have moved in the direction favorable for sellers. So has Cave Creek. So has Buckeye. Everything else has deteriorated. However, here is the weird good news out of all of this, okay? Everything is just negativity up to this point. But we're seeing some strength in the CMI because the change month over month on average for all of these was 3.3% month over month. Last week it was 5%. The week before that, I think it was 5.5%, and before that it was 6%. So we've seen a slowing of the deterioration of on average of all of these cities for sellers. The way they have this is that all of this is looked at from the standpoint of what is good for a seller. So you have to keep that in mind. But interesting, with all of these things going on, now all of a sudden we are starting to see the CMI come back a little bit. For the last month, it's just been kind of slowly getting softer and softer, but not much change overall. 159, the highest that I saw was like 162, I think, about a month ago. So we haven't made that much change. And these numbers are staying pretty close in these ranges here. We're not seeing a whole lot of supply move. We're not seeing a whole lot of demand move. Now, today is Monday. Friday is when rates got real nasty. So we'll see what happens this week, because this demand number could certainly start to fall pretty quick if rates don't make a change. I mean, getting into 7%, close to 8% rates when the median home price in Phoenix is $440,000, somewhere in there. That's a very expensive mortgage, very, very expensive mortgage. And it's much cheaper to rent, frankly. I have done a video about buy versus rent. And, in the long term, obviously, if you have equity in something and an investment, you're always better off for that. But in the short term, the money that you're paying up front, renting can be cheaper. So you just got to think about your own situation for that. Is it the right time for you to buy a house? Do you have the savings? Do you have the stable job? Do you feel like you can afford it even if your situation changes? Those are all the very important things to consider before buying any property. But that's all I got today, you guys. So if there's anything myself or my team can help you with, make sure to check the description below. We have a few helpful links there. Check your instant home value, search our MLS, or set up a discovery call if you're not really sure what to do in this market. And I would love if you would subscribe and hit the like button and continue to be part of this community. So I will see you guys later this week, hopefully with a less cloudy report on some fronts, a less dreary and negative report on Friday, but we'll see how the week goes. Have a great week, everyone. I'm Caitlin McCagg with the Desert Dreamers team.